manager at Teachers Retirement System, and our job at TRS is to educate the TRS members. I'll just give you a little background about myself. For some reason, I don't feel like it, but I've been working for the City of New York TRS for 28 years. I am nowhere near close to retirement, but I have my retirement date already. I was planning it out yesterday, October 12th, 2034. I'm planning on retiring. And I love my job. I just want all of you to know I do love what I do, engaging with the TRS members. But I'm just ready for the next venture after 28 years. So you guys already know. So the CUNY group always contacts us and asks us to talk to you about planning for retirement. And I want you guys to know that if you're hesitant on retiring, it's understandable. We don't know what the uncertainty is about, after retirement, and it's okay, but it's a beautiful thing when you do decide to retire and know that you will have something to do after you retire. So in terms of planning for your retirement, some of the things that you need to do is number one, review your service credit as soon as possible. We don't want our CUNY members to retire with service pending somewhere. As the gentleman just said, I came in in the middle of it. You need to decide what you're going to do with your tax deferred annuity funds if you have a TDA with Teachers Retirement System. As you know, TRS offers the pre-tax, and just recently, as of January of this year, we offer the after-tax, which is the Roth. And so if you're planning on retiring within the next year or so, you have more pre-retirement funds than you do after-tax dollars if you haven't decided. So what you need to do is think about what your plans are. In addition to that, you need to decide on what payment option that you're going to choose and who your beneficiaries are going to be. Now, we can't answer all of these questions for you in this session because it's too much information, but you should definitely consider signing up for an educational program. So one of my colleagues is in this room today. Can you just check to make sure that Roland is in there? He should have gone into the break room. And so he'll be able to answer some questions if necessary. If you're not retiring, you're still going to review your service credit as soon as possible. We never wait on service credit. We want to make sure the service is going to be credited. If you have a TDA, or even if you did not join the tax deferred annuity, it is never too late to join the TDA program. Increase your TDA contributions or consider. Even if you put 1 year away of TDA contributions and then you retire and you leave that money alone, based on compounding interest, your money is going to grow, especially if you have your money in the fixed return. And at CUNY for TRS, we offer the fixed return rate at 8.25%. There's not too many institutions that do offer that percentage. In addition to that, consider paying off any outstanding TRS loans. Now, for CUNY, it's not as popular to take out loans through your pension account, but if you do have one, you should definitely consider that. Now, if you're planning to retire, number one, congratulations. Again, it's a beautiful thing. I'm looking for it for myself in the future. But at TRS, we've streamlined the retirement process so that you do not necessarily have to come to 55 Water Street where we're located. But if you want to come to 55 Water Street, you're definitely welcome to come to TRS. But if you want to retire, you can do it online through the e-form. Now, even if you come to our offices at 55 Water Street, we're going to still retire you on the computer. We're going to use, a tablet. You're going to be on the computer, whichever it's going to be. It's going to be an e-form. But at TRS, there will be a representative next to you, helping you and guiding you through the retirement process. If not, you can definitely do it online. So what you're going to do is go to the TRS website, the regular address at www.trsnyc.org, and you're either going to log in or you're going to register. Now, in terms of logging in, you should already be a registered user. So you should be logging in and you should not be registering for the first time. After you have logged in, you're going to enter in your membership number. And I've displayed an example of what maybe your membership number may possibly be. After you have entered that in, you're going to receive what is called an OTP, which is also known as a one-time password. As you know, with financial institutions, with TRS is a financial institution, when you contact the bank, sometimes they say, we want a next step on authenticator to prove who you are. For me, when I log on to my TrueBlue account for JetBlue, because I'm planning on trips,
You're always
they
away.
give me that one time. Yes, exactly. They give me that. And so I have to do it. So everyone should be familiar with that. So after you put in your username, your password, you get that OTP number, you're going to be on your TRS account. And it's going to look something like this. It's a sample
Monique, one
account.
sec. What is
Yes,
Roland's
sure.
last name so I could get him in the
His
room?
it's Louisant,
Yeah,
Louis. Is he in there?
I think he's still in the other room. That's the problem.
Okay, no problem.
Lous.
Yes, one moment.
I'm telling Talene to bring him over in the room.
I'm yelling at him. We have another session going on at the same time. Okay, thank you so much. So he's gonna
He's
go
on his way.
take a
Yep.
yeah. So this is a sample of your account. Everyone's account is going to be different based on what you have inside of the account, but the format of it is exactly what you see here. It's going to have your membership number. Um, you're going to be on the home screen. You're going to have your membership number. It's going to have your balances if you have a TDA account, etc. Any loans that you may have or outstanding or absolutely no loans, it's fine. And at the bottom of the screen, you'll have your beneficiary information. So when you're on this home screen and you're going to plan for your retirement, if this is what's going to happen, because in this room, we have people that are definitely planning. In this room, we have people that are preparing, but they're not really ready to go. But if you go to the menu screen at the top of the home screen, you're going to click on that. And then it's going to open up a profile of everything that is there for you. You're going to scroll down to the e-form section. When you go to the e-form section, that's where you're going to file for your retirement. And once you click on that, you're going to see again a list of e-forms that you can fill out. As I've said, we do e-forms here at TRS. We no longer do the paper forms as of last year, and the e-form is the more preferred way. So you're going to go to the section that says service retirement. You're going to just click down on it on the link, and it's going to open up to the tier that is specific to you. So the majority of the members that are in this room are currently either tier 4 or tier 6 members. I am a tier 4 member. So if I was to be retiring and I was a TRS member, I would click on my tier 4. You're not going to see anything else. You're going to see what is specific to your account. Now, when it is time for us to calculate your retirement allowance, there are certain factors that we look at. Now, we already know Monique is not eligible for retirement because I said I'm not eligible, but I've been working here for 28 years. So you need to have your retirement age. You need to have your total service credit, all of the service credit from all of the colleges that you have worked for, any of the New York City or New York State agencies. You want that all to be combined together for total service credit. And then last but not least, we also look at the final average salary. Now, again, in this session that I'm getting, about an hour, 45 minutes to talk to you, we can't discuss everything, but we can give you a high level introduction of what it is. Now, based on your retirement age is the date when you retire. but it's based on the proof of birth documentation that you provided at enrollment. So when you enrolled at TRS, how many years ago you had to submit a birth certificate, a passport, driver's license. We enter that information into the system, and then we know what your age is. And the date that you retire is the date of your age. So again, for me, it's going to be in 2034 on my birthday. And then at times, just so that you know, there is sometimes a possibility of a reduction based on your age. But in the history of TRS and looking at the annual reports that we publish, most members do not retire with a reduction based on age. Reductions are based on leaving money to a beneficiary, those type of things. It's just like looking at it as Social Security. A lot of you in this room are going to work until you're 67 so that you can get the full Social Security, because you don't want to get that reduction. Some of us look at the Social Security statements and they say at 62, you're going to get 2,000. But if you work until you're 67, you're going to get 3,000. So some of you may say, well, oh yeah, I'm going to work until I'm 67. Do the numbers just to make sure that I'm not, I'm taking the reduction. In case anyone is ordering, yeah, I'm taking the reduction. We're not waiting until 67. So in terms of the retirement age for a tier 3, 4 member, the earliest that you can retire would be the age of 55 with at least 5 years of service. Now, if you retire at the age of 55 with just 5 years of service, there may possibly be a reduction in your pension, because there is no early retirement plan for CUNY. The regular retirement age for Tier 4 members without any reductions would be the age of 62, or if you have over 30 years of service. So if you have 30 years with CUNY and you're 55 or older, you can retire under Tier 4, Tier 3, Tier 4, and there will be no reductions. But if you retire at 55 with 5 or more years and it's less than 30, there is possibility of reductions. If you fall into this category, and as I said, not many people would fall into this category, you contact us to make sure that we let you know where you fall into, because we wouldn't want you to retire with a reduction. Now, under Tier 6, the age at retirement would be 63 with at least 5 years of service. So Tier 6 is a little bit higher, and it's just basically in the tier that you are in. Now, the second factor that we look at is the final average salary. Now, under the FAS, this is the one that's kind of like the most complicated that we can't get into it, but I do have a breakout session that you could attend. I think it's going to be in the month of May, and I'll show it to you at the end of this session. Now, under the final average salary for all of the tiers, it is the average of your highest 3 consecutive annual salaries. And then there is a 10% rule, which is called the Kingston legislation. So if the salary you earn during any year included in the 3-year period exceeds the average of the previous 2 years by more than 10%, the amount in excess of 10% would be excluded from the calculations. So again, it's kind of complicated to discuss this, but if you look at the 3 consecutive years, and we want it to be the highest, that's what we're going to pull. We're going to look at the 3 highest because we want to give you the most favorable. But then there is a 10% amount that we have to look at. So we look over it over a 5-year period. That is what we actually do. So again, we can't get into all of that here, but we do have a session that we can offer it to you. Now, some of you may say, well, what is included in the final average salary? Many things are included. Number one, your regular contractual salaries is included in the FAS. That's the base salary. Any union increases are also included in the FAS. Any bonuses that you may possibly receive that is pensionable is included. Multiple employment is also included. For example, if you work for CUNY in the day or you work for CUNY at night and then you work for the DOE during the day, or there's a combination, or maybe you're working for CUNY and then you're also working for another city agency, that would be considered multiple employment. And it's very important that if you're working for the city for two jobs, you let us know, because we want that salary to be added on to increase what the final average salary is going to be for you. And if you're working as a full-time, you're working as an adjunct at the same time, that is also included. It's kind of not considered multiple employment. It's just, you're working for the same city agency. And then any type of retroactive payments is also included. So FAS is just not based on contractual salary. It's got a whole gamut of different things that that TRS is going to add on to increase. And the thing is that you want the FAS to be as high as possible, because then you're going to get more money in the long run, which is what, we want to do. And our goal is to receive as much money as possible for our retirement so we don't have to work after. Now, the last portion of your factors that we look at for your pension is total service credit. Now, again, I said total service credit, it adds everything. You want all of your service to be together. It's important because if there's anything that Monique says to you today, this is a quote: the more service you have, the higher your pension is going to be. That is just what it is. So if you work for 5 years, you're going to get a pension. But if you work for 10 years, you're going to receive a higher pension. So you want all of your service to be credited towards you. Now, in terms of total service credit, there's different types of service. There's membership service. That's why you're working currently with CUNY. Transferred service may have happened, like if you are first starting out and you're getting your footing as to where you want to be. Maybe you work for the DOE and you said, I don't think I want to work with the kids. I think I want to work with adults. And then you moved on to CUNY. So that would be considered transferred service. If you are a member of another retirement system. Another type of service that you may have possibly had is optional service. Now, optional service, it falls into 3 types of buckets, and not everyone is going to have it. So the first one is prior service. Any service that was rendered before you became a member of any retirement system. Maybe you were doing day-to-day sub work while you were going to school and you needed some money. Prior service would be considered for under sub work. If you have rendered service through the military, thank you for your service, as we always say, but you can receive credit under military service. And then aiming service, which is not too popular with CUNY. That's a DOE, but it is a type of service that you can receive credit for, which is aiming service. Now, aiming service, if you don't know, is service that was rendered while you were on leave of absence. So say you took a leave of absence and then you decided that you were going to do day-to-day sub work, and it would be considered pensionable. So we add up all of the service, all different types of service, and then we would look at it as total service credit. And all of this would be found in your annual benefit statement. Now, your annual benefit statement would be found online. TRS no longer mails statements to our members. You have to log into your account under your registered account, and then you can download the booklet or you can view it based on what you want to do. And as we always say, all of this is done under a secured server. Now, if by any chance, because I can't see the questions, if there are any questions that are popping up, but if you have any service issues, that's about what we just talked about. There's different reasons why a member can have service issues. The first thing is if your ABS is blank. This is your annual benefit statement. What we would need for you to do is go to the TRS website, and then you go to the form section, and then you click on statement information. It's all there. You fill out the ABS form, which is at the bottom of the screen. So it would be called the ABS inquiry form for tiers 3, 4, and 6 members. and you could fill it out online or you could fill out a PDF. So that's the ABS inquiry form. That's if your ABS is blank. If your ABS is blank, if your ABS has information, obviously you're not going to fill that out. And if it is blank, I do apologize. I can't fix it right now because I'm speaking. So that's for the ABS. Now, if you need to know what your total service is, you can fill out the SB 66. And this is for tiers 3 and 4 members. Now, the SB 66 will give you a total service letter. You fill that out, you send it into TRS. It's a very simple form. You fill out the front and then you sign the back. You mail it into us, and then we are going to send you a total service in the mail. Now, if you've worked at multiple colleges, and this is very, very important for the CUNY TRS member, because we hear this all the time. Every college is separate. So if you worked at multiple colleges, you need to fill out the RE5. The RE5 is the service data form, and you're not going to fill it out. You're going to give it to your college. Now, all you need to do is say to the college the RE5. They know exactly what it is when they're dealing with TRS. But for the 1 or 2 persons at the college that may not know, you tell them it's a wage earning statement. And this is for all of the colleges that you have worked at throughout the years. Most colleges send it to us yearly, and some don't, but we want the RE5 so that we make sure you're getting all of the credit that is supposed to be applied to you. Now, if you need to purchase service for any reason, you're going to fill out the SB 64, and that would be for, it's actually for all tiers. It's for tiers 3, 4, and tier 6. It should say tier 6 as well. And if you need to purchase service, you would fill that out. Now, what does it mean to purchase service? That is for the credit that you have not and gotten credit for. So for the prior service, or you have service that for some reason you didn't get credit for it, you would need to fill out the cost letter request form. Okay. And I hopefully my colleague was able to post those. And Roland, you could always send me a text message, and I will read my messages. So how's everyone doing? Am I doing good on time? Okay, wonderful. So some of the questions that some of you may possibly have is, how is my pension determined? So yeah, I was on the retirement kick this week. I went to a pension expo for the UFT on Saturday and had a wonderful time. But then I started thinking about, yeah, let me talk about my retirement. What am I doing? That's why I sat there and calculated my retirement date, and then I was playing with the calculations. You can do this too. It's very, very simple. I don't want you to feel that you cannot do it. Now, in terms of a tier 3 for retirement allowance, it's very simple. And so what you're going to do is take the years of service that you have. You're going to multiply it by this final average salary, which you do not have, and you're going to multiply it by the benefit rate. Now, in terms of the final average salary, this area right in the middle, you sitting there trying to figure it out is just, don't do it. But what I would say to you is use your current salary or project your salary. So if you're currently 120,000, maybe you think by the time you retire, your salary be 150K. You put in 150K because all you're doing is providing yourself with an estimate. That's how easy it is. Now, the benefit rate is based on what I'm going to show you on the screen, as you can see. Now, if you retire between 5 and 19 years of service, the benefit rate is 1.67. Now, if you're already past 19 years, don't write it down. Now, if you have between 20 and 30 years of service, the benefit rate is going to be 2%. That's what it is for me right now. And then if you have over 30 years of service, which will be me in a number of years, it is 60% of the final average salary for the first 30 years. And for each additional year after the 30 years, it's going to be 1.5%. 1.5% is not a reduction. It is in addition to the first 30 years, anything after 31, 32, 33. So to show you how we do the calculations, I'll be happy to show you an example. Here's Emily. She is a tier 4 member. She has 25 years of service. Her final average salary is 100,000, and she's planning on retiring December of this year. So, how do we calculate this? Everything is in that statement. Oh, and I did a mistake here. Look at that. I have 20 years multiplied by 100,000 multiplied by this benefit rate. The benefit rate, based on what we've just spoke about, is going to be 2% because she's retiring between 20 and 30 years of service. Again, that's how easy it is to do the calculation. So let's show you what the calculations are. So we have the 25 years of service. We're going to multiply by the final average salary of 100,000, and we're multiplying it by 2%. Her pension is going to be $50,000 annually, which is approximately $4,177 monthly, $1,177 monthly, and some change, some 78 cents. This is how we do the calculations. It's not difficult. You can do it. And I can put in my 28 years, which I did this week. I put in my salary, I projected my salary, and then I put in the pension benefit rate, and I was able to see what it is. And then I said, oh, I need a raise because that's not enough for me to live off of. I gotta travel. So, with that being said, let's look at it in another way. So now you have the nine. Now we're going to look at it based on all of these years that you see here on the screen. So you have the 19 years. We're multiplying by the same final average salary of 100,000. We're multiplying it by the benefit rate of 1.67%. 1 2/3% is the same as 1.67%. Now, if Emily was to retire with 19 years, it would be $31,624. Now, if Emily was to retire at 20 years, the benefit rate would be 2%, and her pension benefit would be $40,000. Now, if any of you are between 19 and 20 years, there's a significant difference between 1.67% and 2%. It's significant. So you try to stay until you have the 20 years so that you can get the 2%. It's a no-brainer. TRS does not provide advice, but how could I not say something like, there's a big difference between 1.67 and 2%. Now, as we've already discussed on the previous screen, Emily had 25 years of service, and the pension benefit or the rate is 2%, and it would be half, which is 50,000. Now, if any of you in CUNY, which CUNY is historically known for having our members work for many, many years. I had a professor at Brooklyn College that worked for 54 years before he retired. If you are in that category, this would apply to you. If you have 30 years of service, we take your final average salary and we multiply it by 60%, and the amount is going to be $60,160. This is the base amount for the first 30 years. Now, any additional years after the 30 years, for example, at 32 years, we take the 2 years, we multiply by the final average salary, we multiply it by 1.5%, and the 2 additional years is $3,000 more. We take the 60,000 plus the 3,000, and for 32 years, we add it up together and it becomes 63,000. That's how easy it is done. Now, if you don't want to do the calculations, you can use the retirement calculator that is found on the TRS website. You have to log in and it's under your account. Now, I didn't know how many people are tier 6 in this room, but please let me know if there's any tier 6 members. You can just type in 6 in the chat and Roland will let me know. How many How is my tier 6 pension determined? It's a little bit more. Thank you, Karen. It's a little bit different because of the benefit rate. So tier 6 doesn't get as much as tier 4, but they're always making changes. So, there's a possibility that things could change in the future. So, under a tier 6 retirement calculation, and you may want to take a copy of this screen, the benefit rate, if you have less than 20 years, is 1.67%. If you have 20 years, it's going to be 35% of the final average salary. And anything beyond the 20 years, it's going to be 35% of the final average salary and 2% for each additional year over 20 years. To tier, similar to tier 3, 4, but obviously the 60% is different. So to show an example here, we have Jason. He's tier 6 with 25 years. He has a final average salary of 100,000 and he's retiring in January. So for the first 20 years, and see, I made that mistake again. It is 100,000. No, I did not make a mistake. For the first 20 years, it is 35% of the final average salary. So 100,000 times 35% is 35,000. Now, for the 5 additional years to make the 25 years, we take the 5 years, we multiply it by 100,000, and we multiply it by 2%. What you see on the screen is the numbers inverted to a decimal. So for the 5 additional years, it is another $10,000, and his pension for 25 years is going to be $45,000. And that is what it's going to be. Now you can go, if your years of service is higher, it all applies. So it'll be $45,000 annually now, which is $3,750 monthly. Now, if in the same scenario as I gave for Emily, if Jason, it's Jason, right? I think it's Jason, right? Jason is going to retire at 19 years of service. The benefit rate is going to be 1.67%. And over to the right, he would be receiving 31,000. At the 20 years, we already know that it's going to be 35,000. I've already shown you what the numbers are at 25 years. And at 32 years, we already know that the first 20 years is at 35%. And for the additional 12 years, we take the 12 years, we multiply it by the final average salary of 100,000, we multiply it by 2%, and he would receive a combined total of 59,000. It's not broken down separately. You're going to receive it all into one pension check, but in the benefits letter that you receive from TRS is going to show you a breakdown of what it actually is. So this is how we do the calculations for tier 6. So again, under tier 3, 4, or whether you're under tier 6, you can do the calculations yourself with a calculator, and you can get an estimate for what your pension is going to be. Now, once you have the baseline of what your pension is going to be, then there are payment options that have to be applied. Do you want the maximum, which is the greatest payment that's available to you, and you're not leaving a benefit for anyone? The continuing payment means that you're leaving a benefit to someone in your family. Maybe it's you and your significant other, and the two of you pay bills together, and you want to make sure that if you pass or that person passes, they're leaving that benefit that will still help you pay the bills. And then you have the guaranteed number of payment options. Now, the last one is not that popular based on our annual report. It's a guaranteed number of payments for your beneficiary if you decide to pass away within the first 5 years or 10 years of your retirement. And that's why it's kind of like not too popular, because members don't know when they're actually going to pass away. And I think with the deferred compensation plan, they were saying that I think they said like men live until like they're 84 and then women were 80 something or whatever. Sometimes we outlive those numbers currently, and gratefully so. Dad is 88, mom is 86. So they've already outlived their, those numbers that was being quoted. And we definitely want that for all of us. Now, in terms of the payment options, you can always go to our website to find out additional information about those payment options, right? So, in terms of retirement planning, and that's about the most that I have to say about pension. And then I'm also going to tell you as well is that um, we have sessions again that are available that you can join at your leisure so that you can get a more fine-tuned answer besides this general presentation that I'm offering. So in terms of retirement planning, um, some of the questions that I ask myself, and these are questions that you should be asking yourself is like, what are my expenses going to be after retirement? How much money will I need, and where is this money going to come from? So I do worry about this. And because I'm single, and I have two kids. I don't think those kids are going to help me when I'm retired. They say they will, at least one of them will. The other one I don't even hear from. So I want to know, do I have enough money to pay for my bills when I'm retired? Now, in terms of retirement income, there are four pillars of retirement income, if you don't know. The first one is Social Security. And when we were kids, we were told, at the dinner table, Social Security was what was supposed to pay our bills, but we clearly know that that is not going to be the case. And that's what I learned when I started getting into pension planning, over 20 years ago. So Social Security is good, but it's not enough. When I came to TRS, I didn't even know what a QPP was or a pension plan was. And I'm grateful being given the opportunity to work here and to learn. And you should be also happy of the fact that you're working for the city of New York and the city offers a defined benefit plan. So the second pillar is your pension plan, which is the QPP, which is why you're here. The next one is your personal savings. Now, personal savings could be your money in your savings account, but we want you to think of your tax deferred annuity as your personal savings. And then last but not least, which is your after retirement income. What are you going to do after you retire if you're planning on generating income? So the retirement income, obviously, that we focus on here at TRS is your QPP and your tax deferred annuity. So I just spoke to you a lot about the QPP. Let's talk about the TDA. Now, the tax deferred annuity has been established since I've been here and much longer. I think it was like in the 70s when it started. And we do have millionaires in the tax deferred annuity of TRS members. They're quiet millionaires, but there's a lot of them. Do not, and some of you might be inside of this room right now. Do not um think that there is not, because that 8.25% over 40 plus years has made millionaires of TRS members. Now, when it is time for you to retire, some of the questions that you may ask yourself is, what is it that I'm going to do with my TDA money? You may be nervous about starting to take that money out, starting to pay taxes on it, because most of the money is on a pre-tax basis because you paid no taxes on it. But the distribution option of your TDA at retirement is deferral only. There used to be many other options, but at retirement, we push you into deferral status only. And that is not a bad thing. Now, there are benefits of deferral status, which I will show you. Now, in the past, because we just changed this as of last year, 2025. But 94% of the TRS members prior to 2025 put their money in deferral status. So deferral is clearly what the members were doing. Now, the benefits of deferral status is you're deferring your TDA, the distributions. You're deferring taking out money of your TDA past your retirement date, which is good. What are the benefits? There's investment returns. There are loans that you can take out, and it is tax deferred on the pre-tax basis. You can elect to withdraw, annuitize, anything that you want to do after retirement. You can maintain TDA deferral status for life. and the remaining will go to beneficiaries. This is why it's highlighted in blue, because a lot of members want to know what happens to my TDA if I'm going to die. You can retain TDA deferral status until you withdraw all of your money or annuitize the entire balance. And then there are partial withdrawals that you can take out on an as needed basis, and the remaining stays in a deferral status. Now, under the IRS rules and regulations, you got to take out a required minimum distribution, and it's for the pre-taxed only, and it's at the age of 73. If you're in the Roth or you're going to join the Roth that is being offered as of January of this year, you don't have to worry about that. But under the pre-tax, you're going to have to start withdrawing money at the age of 73. When it's time for you to do this, TRS does contact you. We'll set you up with classes. We'll do whatever it is that we need to do so that you feel comfortable about taking out the RMD. Now, what can you do after retirement with your TDA funds? Partial withdrawals. I just said it, but I want to show it to you on the screen. You can do a total withdrawal. Make sure you know what you're doing when you do that, because if you're making it payable to yourself, you may be paying a lot of taxes. It might put you in a higher income tax bracket, and you have the option to annuitize. It's not that popular, but annuitizing is definitely an option. And TRS does not offer advice, but it's all up to you or what you want to do. Now, in terms of the filing procedures, in terms of when can you apply? CUNY retires at the end of a semester, okay? So you choose the retirement date, and then you have a 90-day window to apply. So if you're going to retire as of like Jason, as of January 31st of 2027, you have 90 days prior to that. So it's January, then to January, you go back, that's December. You have November, October. So you're coming at the end of October within this 90-day window. And you have up until one day before. So if you're retiring January 31st of 2027, you have up until January 30th to apply for your retirement date. But you have from October 31st up until January 30th. So the full 90-day windows. If you want to rescind your application, you can do it. It has to be done before your effective retirement date. So you have, you got 90 days to make a decision on what you want to do. Now, if you have other income after retirement, you need to think about, the incomes that's going to be coming in. You need to contact Social Security. As you know, TRS is not Social Security. So you would contact them at an appropriate time to make sure that you're getting your Social Security at the right time. Don't forget about income from personal investments. The more money that you take out, the more your tax implications are, especially if it's being taken out on a pre-tax basis. And don't forget to pay your taxes. So at TRS, what do we offer? We offer your pension and we offer your TDA. Okay, are we good, Jenna? And what we don't offer. TRS does not offer health insurance. We don't administer it. We are a fiduciary company. We offer financial services to your pension and your TDA. We don't handle the Travia, which is sick days. We don't handle SHIP if SHIP is offered through CUNY. We don't offer dental. We don't offer union dues as well. All we do is like take deductions that we are told to do for the, within the QPP and the tax deferred annuity. And again, we don't offer Social Security. All I say is, leave a little bit for me when it's time for me to retire. So what about the other things? So we do not, TRS, we offer you estimates. The estimates are in your annual benefit statement if you're retirement eligible. If you're 45 and you're in this room right now, you're not going to see an estimate inside of your ABS booklet because you're not retirement eligible. But if you're 50, 52, 55, you look in your ABS booklet and you will see your estimates in there. There is a retirement calculator, as I mentioned. You need to log on to your TRS account. You're not going to find it in the non-secured section. So you have to log in and you can play with the retirement calculator so that you can see what your estimates are going to be. So as a reminder, if you're planning on retiring, review that service credit as soon as possible. This is what is going to delay your pension if your service is not credited properly. Decide what you're going to do with your TDA funds. We are already going to put it in deferral status for you, but then you may want to make other decisions. It's all up to you and what you do. But what I really would tell you is not to make a withdrawal if you haven't made decisions properly and you've done the research and you've asked the questions. Because once the money comes out from TRS's TDA account, you can't put it back in. All right. Decide what payment option that you need to choose from. If you're not retiring, review your service credit again, increase your TDA contributions, pay off any TRS loans if possible. And again, if you're going to be retiring, it's an e-forms type of situation now. You're going to go to you're going to log into the TRS account. You're going to go to trsnyc.org. You're going to go to the e-form section. You're going to go to this sample e-form and you're going to go through the whole process. So I'm sure that, CUNY and you've heard about TRS and the educational programs that we offer. They're good. That's the best that I can tell you because it gives you a lot. And I've noticed that there's been an increase of CUNY members in our sessions, which I absolutely love. So you go to the TRS website and you look for educational programs and you look for sessions that apply to you. Do not look for sessions that say just for CUNY. You're not going to see that. TRS members are the same, regardless if you're in CUNY or you work for the DOE or a charter school. If you're close to retirement, you come to a getting ready for retirement. It's a two-part session. If you have people that are tier 6 and they want to know more, you go to a getting ready for retirement for tier 6, or you go to something else for planning for tomorrow. And they're more targeted topics. If you want to know more about service buyback, final average salary, those type of things. And all of these sessions are actually online right now. So definitely tell your colleagues, tell friends. Listen, go to one of those sessions. We're not getting paid extra to do these sessions, so don't feel like we're a commissioned salary group because we're not. We're city employees just like you. So if you want to come to TRS, you can meet with us with a member services rep Monday through Friday, usually from 9 to 5. In the summer, we close early on Fridays. You can call us. You can set up a video conferencing. You're on Teams right now. We do video conferencing through Microsoft Teams. So you could do a one-on-one virtual call. You can email us, and then you can also write to us. There's so many different ways of you contacting us. All of this is on the TRS website. Now we have additional sessions that we are offering to the TRS members. Because again, we do this all throughout the year. I and the team that I work with, the member education team, we offer these sessions. So I'm going to leave this up. If you're interested in any of these sessions, there are QR codes. Excuse me. There are QR codes that are next to the sessions where you can register for a session at your leisure. And I'm open to answering questions. Did I
Yes,
just
there's,
close my window?
yes, you did. Can you put it back so they can do the
Sure, if I
screen
could
grab
figure
of
out
it?
how I did that. Jeez, let me. Okay, does that work?
Yep, that's much better. Perfect.
Okay.
Karen, you had a question. Did Monique answer it during the presentation? I
She can
don't,
take herself off of mute if she wants
yeah,
to.
Karen.
I can't see the
Yeah,
chat.
that's fine. I
So,
got the chat. Don't worry about it.
okay.
Maybe she logged off already.
Oh, I
Um,
hope not.
Lisa, do you have a question? Or did Monique answer it during the
Oh, no,
presentation?
I do have a question. Thank you for calling on me. If you work for a SUNY school or a private school, but did not contribute to a pension plan in either place, are you eligible to get credit for that?
That's a very good question. So you can get credit for the SUNY work because it's under the State University of New York or the State of New York, just like the City of New York, they have the right to hire or fire you. Under the private entity, you would not be able to receive credit for it. So for the state SUNY, um, you would fill out the SB 64, if I'm not mistaken, which is the cost letter form. And with that cost letter, you would tell us the time frames that you are working with SUNY. What we will do is send this information to that college to verify when you were working. And then once we get the verification from the college, then we're going to send you a cost letter and you can do a buyback.
So I did not have to participate in their pension plan because I did not. And I was also working part-time. So is that still okay, or did I have to be a full-time employee?
No, you can still do it. Part-time service is fine as well. It is the fact that you were an employee of the city of New York or the state of New York, it's considered like prior service. So you're able to receive credit for those type of things. So it's nothing for you to be concerned that you weren't in the system or anything at the time, but you can get credit for it now.
Great, appreciate it. Thank you so much.
You're quite welcome.
And Jana, would you like to unmute yourself and ask your question?
Yeah, sure. I have a couple of questions. How to contribute more in TDA plan? And during the FAS calculation, does it add if there is a federal grant money that fetches the or any administrative duty like summer chair or something similar? Thank you.
Okay, so for the federal, the answer is no. TRS is under the city or the state of New York umbrella, and obviously the feds is the feds. So federal grant money, like maybe working for CUNY Foundation, where you might be getting separate money or whatever, it is not creditable towards your pension. I'm not sure about that CUNY share or what you was mentioning
Yeah,
afterwards.
administrative duty. Yeah.
It depends on how you're being paid. If you're being paid by the city of New York, that paycheck or the money is coming in is under the city, state of New York, then it might be pensionable. Because not familiar with it, I don't want to tell you absolutely yes, and I don't want to tell you
Yeah.
absolutely no. In terms of your tax deferred annuity, how do you increase it? Number one is a good thing to do. The goal amount, baseline goal amount for the TDA is 24,500, which I'm pretty sure you heard throughout the morning for the first part of your the pre-retirement seminar. There are catch-up amounts depending on what your age is up until the point where you decide to retire. Catch-ups start at the age of 50 and up. Now, if you want to increase your TDA, all you need to do is log on to your TRS account and you would go to the TDA section and you would increase your TDA contributions. That's it. That's how simple it is. There's no form for you to fill out.
Thank you so much. Thank
You're
you.
welcome.
Any other questions before I let Monique disappear on us and go on some vacation?
By the way, we'll not be here on Thursday. It will be
Look at
Daniel.
them.
If I told you
appreciate-
we're all city employees here. If I told you I have over 500 hours worth of vacation time that I'm unable to use.
Okay, Eileen has one question. Eileen, would you like to
Yes.
unmute yourself and ask your question?
Hi, Eileen. Good
Hi,
morning. Good
Hi,
morning.
Monique. Good morning. Thank you for doing this. This is very helpful. Presently, I work at CUNY, but many years ago, I worked for a short time for the Department of Education. But my understanding was you had to work for 20 days in a year to be able to get back service credit. Is that true?
That is true. You need to put in there's a certain amount of hours that you need to hit for you to receive credit. Have you applied for it, or was this something told to you verbally?
I think I just went to their website, or I looked through some forms that I had from the time that I worked. I don't really recall. But
Okay.
I think maybe I work for 19 days or something like that in the year, not the 20.
Okay. So would it hurt for you to fill out the cost letter request form to find out if it's creditable for towards you? It wouldn't hurt. Is 20 days going to make that big of a difference? No,
No.
but it could reach you to a milestone that you need. So if you're willing to, you can always fill out the SB 64, the cost letter request form, if I'm not mistaken, and then see what happens. I mean, all you can get is a letter from us saying yes or no. That's
Great. Thank you
at
very
your
much.
discretion, sure.
Awesome. I think everybody has asked their questions from what I've seen, and Monique did an amazing job. Thank you very much, Roland, for your input into the chat. We appreciate that.
We love
So
what we do. We really
I-
do.
no, I see. This is why you guys are very, very, very happy over there.
Yes.
Nobody ever comes here with a mean face from TRS.
No.
We appreciate you all. So I will stop the recording at this time and I will end the conversation. Everybody, enjoy the rest of your afternoon. Thank you.
Thank you all. Bye-bye.